It will unfold slowly, then all at once. Hey guys, Britt here. Welcome to End Times Bible Prophecy. What am I talking about? I'm talking about Japan, the fourth largest economy in the world. The Bank of Japan is trapped. And with a critical election this weekend, it may soon take center stage in the world's eyes. But regardless of what happens this weekend, long term, we know this is all going to blow up. It's inevitable. It's just basic math. So let's start with this right here. So this is from Reuters. This is back in June. Japan to release 200,000 more tons of emergency rice to curb prices. So for those that aren't aware, there has been a surge in rice prices in Japan. Year over year, it's doubled in price. And this is a result of really just terrible government policies going back several decades. This isn't because there's a rice shortage in the world or anything like that. It's total mismanagement of Japan and of its agriculture, of so many different things, just as we've seen with the banking system. All this is going to come to a head sooner rather than later. So let's take a look at this from Just Dario. He sent out this tweet. He said, rice, the most eaten food in Japan, has experienced 100% price inflation. He says in just a few years. It's really in just 1 year. This hits people's lives right at the core, and I doubt they will endure this much longer without starting to voice their discontent. And guys, this weekend, this Sunday, there's an election in Japan where people will have the opportunity to voice their discontent. We're going to look at in a moment what that may mean and how that could change a lot of things financially, not just in Japan, but for the entire world. He says, however, the Bank of Japan cannot raise interest rates much higher from here without triggering the implosion of the Japanese financial system first. So again, the fourth largest economy in the world, implode its entire financial system, and the Japanese yen carry trade thereafter, with ripple effects around the globe. And we've talked about that in the past and how that could lead to a unraveling of global markets, a crash in the global markets. He says the Bank of Japan really put itself in the worst possible spot. And that's absolutely true. We've been talking about this for some time. Again, this is unfolding slowly right in front of us. It's happening. It's not something we're theoretically saying is happening. We're watching it happen, but it's happening slowly and slowly until one day it happens all at once and the whole world will know about it when it happens. So let's look at this article from Hedge here. This is from, I don't know, a little over a week ago, early last week. It says, will Japan's rice price shock lead to government collapse and spark a global bond crisis? He says, a little over a month ago, we first summarized the plight of Japan's soaring inflation and contracting economy with one word, rice. This is what we said. What is ironic is that Japan does not actually have high core inflation. It does, however, have soaring rice prices, which have skewed inflation expectations across the population as rice is such a huge component of the overall consumer price index basket. Meanwhile, the Bank of Japan is scrambling to contain inflation, which has tumbled ex-food with real wages near record lows. In other words, they're actually experiencing deflation except for in rice for the most part. But because rice is such a core component and it's such a visible component in consumers' eyes, the expectation is that inflation is running wild and they're going to push to want to raise rates to stop that, which is, well, it doesn't matter what they do. Whatever they do is the wrong thing. But it says, which is tightening conditions by raising rates, even though it has zero control over food inflation or over the price of rice. And what have we talked about before? These banks, they can paper over these problems when the problem is a lack of yen, a lack of dollars, a lack of euros, because they can print those things. But when it's a lack of oil or a lack of rice, well, the central bank can't print rice. You either have it or you don't, right? And so this is one of those situations we've been talking about. It says, however, as a byproduct of its monetary policies and strong yen, the bond market is crashing every day now. And soon this bond crash will spread to Japan's banks and global markets, sparking a global crisis. And he says Japan will unleash the next financial crash. And this is what we've been talking about. We've been talking about this for quite some time. Going back probably almost 3 years is when we first started talking about this. We've really ramped that up in the past year. But why is that? Well, let's take a look at this article about Japan's bond sell-off as a warning to the world. And it tells us exactly why when we scroll down here to these 2 paragraphs. It says, with debt to GDP at 260%. Now, to put that in perspective, everybody says, oh, the United States is so indebted. And they are. The United States has spent lavishly far more than they have. $37 trillion in debt, but the debt to GDP in the United States is about 120%. Japan is at 260%. For those that don't know, that's more than twice as worse. They're in really bad shape. And it says, and the Bank of Japan is already owns more than half of the outstanding Japanese government bonds. We've talked about this. This is what most people would go to jail for doing what the Bank of Japan and the government of Japan have done. So they've issued debt. They've said, we want to borrow yen from you. We'll give you this paper promise that we'll pay you back. And then they print yen and use those printed yen to go and buy back the debt that they issued. So can you start to figure out the problem here? This can't go on forever. Eventually, they own all the bonds. Who then are they issuing the bonds to? So at some point, you come to the end of this fraud or Ponzi scheme, whatever you want to call it. It says, with 260% debt to GDP and the Bank of Japan owning more than half the Japanese government bonds, the country's leadership is boxed in, or trapped, which is what we've been saying. The Bank of Japan is no longer stepping in to buy more bonds. Inflation is up while real wages are down and GDP is shrinking, meaning the economy, the Japanese economy, is shrinking. That leaves Japan trapped between raising rates and risking recession. And I would say more than recession, it would be a severe depression, probably the worst that Japan has ever experienced. It would completely crush everything in Japan. Or holding rates steady and letting inflation and yields run even hotter, meaning, well, who knows how bad the inflation could get. We said the price of rice has doubled in the past year. If they keep rates the same or lower rates in Japan, the price of rice might quadruple in the next year. There's a very real possibility. It's not a guarantee, but there's a very real possibility that if they do that, we could see hyperinflation in Japan. Again, the 4th largest economy in the world. That would have implications for every person on the face of the earth, not just those in Japan. Those in Japan would be hit very hard, no doubt, but this would hit all the global financial markets. Let's take a look at this. This is from CNBC. It says, Japan bond yields hit multi-decade highs as fiscal fears mount ahead of election. So this is from Tuesday. Again, the election is Sunday. It says Japan's benchmark 10-year government bond yield climbed to its highest level since 2008 on Tuesday as concerns about fiscal spending mount ahead of an upper house election. Yields on the 10-year instrument climbed to 1.599%, the highest since 2008. Yields on the 30-year Japanese government bond also rose to a record high of 3.21%, while Japan's 20-year government bond yields spiked to their highest level since 1999. So we haven't seen anything like this in years, is what this is telling us. Quote, Japan's long yields and super long yields are currently rising due to expectations of fiscal expansion after the upper house election coming up next week, said Ken Matsumoto, Japan microstrategist at Credit Agricole. A sizable number of Japanese politicians and parties are actively discussing consumption tax cuts ahead of the upper house election set to take place Sunday. Now, guys, we saw something very similar to this, I believe, back in 2022 in the fall of that year. We had a new government come into power in the United Kingdom, and they issued a budget that cut taxes, but spending was still up, and it led to a crisis that ended that government. They had a dissolved parliament at that time, had a new election, because the bond market went crazy. The yields spiked, realizing that the revenue wasn't going to come in to be able to pay off those bonds. And that's what they're talking about here, is cutting taxes and raising spending. It says people are concerned about the election because the politicians are talking about consumption tax cuts, and tax cuts of any sort in Japan is suicidal. It says Japanese Prime Minister Shigeru Ishiba has maintained that he will not resort to tax cuts funded by more debt issuance, although opposition parties are calling for tax cuts and more spending, which could lead to more debt, which, again, almost certainly will. You know, there are certain instances where the economy would grow under tax cuts, leading to higher revenues. This is not one of those instances. It's just, the demographics aren't there. It says this political uncertainty is creating doubt over whether Japan's government will stick to fiscal discipline, said Vishnu Varathan, head of macro research for Asia ex-Japan. Now, so stick to fiscal discipline. So just talked about they had a 260% debt to GDP ratio. The problem is they have not been sticking to fiscal discipline. And that's what they say right here. It says Japan has one of the world's highest levels of public debt relative to the size of its economy. And that's an understatement because, again, among industrialized modern economies, they're number one. They're not one of the highest. Because if you look at the others, they're really states that are in complete turmoil where the citizens are starving. So Japan is sort of out there on its own. This is going to be a problem. This is going to be a problem. And we can begin to see this stuff right here. So this is from Japan's 40-year Japanese government bond. We see how these yields were 0.5% just 5 years ago, and how they've just gone up and up and up again. It's a slowly unfolding disaster. It says, while the government has flagged the need for more fiscal discipline, it relies heavily on issuing new debt to fund its obligations. Tax revenues alone are insufficient to cover the government's expenses. The most recent trigger is the election. People are concerned about the election because the politicians are talking about consumption tax cuts, and tax cuts of any sort in Japan is suicidal, said Amir Anzavarde, Japan equity market strategist at Asymmetric Advisors, who added that tax cuts would be dire given the fiscal situation Japan is facing. So again, no matter what they do, they're in trouble. But he says, this is why the bond vigilantes are out. Now again, no, they're not bond vigilantes. They're people with common sense. He says, and they're saying we need more yield to invest in the bond market. Yes. You know, if you're going to be inflating your currency, if you're going to be printing it to buy bonds, it's in such a terrible situation. Yeah, maybe we want more than 0.5% interest on an annual basis on a 40-year bond. Because how can you do anything but lose out as an investor on that? So there's a shorting going on in the Japanese government market. No, it's not a shorting. It's just a flat out selling. Nobody wants it. Who in their right mind would invest again in say we're going to lend you our cash for 40 years and you can pay us 0.5% or even 3%. And we know that you're basically going to implode at any moment. So it's game over. Maybe not right this second, but we're seeing this crisis unfold slowly and slowly. We're seeing it slowly unfold until one day it happens all at once and the whole world wakes up to this. That day is coming. It's inevitable. Again, it's simple math. What can't go on forever will not go on forever. The Bank of Japan is trapped. No matter what they do, they either destroy their currency or they destroy their economy. Most likely, both. That's what we're looking at. So guys, if you live in Japan and you're watching this, you need to follow the biblical principle of diversification. Again, we read that in Ecclesiastes chapter 11, verses 1 through 2. It tells us to invest in many places, for we do not know what risks lie ahead. If you're all in yen, if all your savings is in yen, you're setting yourself up for disaster because there's not a certainty, but a high likelihood you can see massive inflation, maybe even hyperinflation in Japan. Protection against that is precious metals, gold and silver. Make sure you're diversified. I'm not saying go all into all of those things, but diversify if you live in Japan. Make sure you have a deep pantry. No matter where you live in the world, make sure you have a deep pantry, meaning you have food you're going to eat anyway, but you got a bunch of it at home just in case. Because guys, it's uncertain how all of this is going to turn out once this goes south. And again, it's inevitable that it will. I don't know the exact timing. Is this going to be next week, a month from now, a year from now? Will we even be here? Will the rapture have occurred already? I have no idea. I do not know the answer to those questions. But I know that the Bible says the prudent person foresees danger and takes precaution. Right? The simpleton does nothing and suffers the consequences. So make sure you take action to prepare for this. I believe that this is going to set off, once this does happen, the greatest financial crisis the world has ever seen. And as a result of that, we're going to see them roll out all of the things they've been telling us they're going to roll out. Central bank digital currencies, tokenized assets, digital IDs. That will become the new system. It will become mandatory. Cash will go away. And they will be able to track everything we do on a financial basis. We will have a system that's indistinguishable in capability and function from the mark of the beast system. It's not the mark of the beast because we're not in the tribulation. There is no beast. There's no Antichrist in power yet. But we're seeing the stage set for those things. So we need to be preparing the best we can to weather the short-term crisis we're seeing. You might hear the helicopter going right over the house right now as I speak. But we need to be able to weather that short term the best we can. But the way we weather everything is through Jesus Christ. Make sure that your life is built upon the rock, the solid foundation of Jesus Christ, because no matter what storms this world throws at us, we can stand tall if we abide in Christ. But for those who have put their hopes in anything else, that's building your house on shifting sands, and the storms that come in this world, and they are coming, will sweep everything away. So we need to be preparing spiritually to guide those who have built their houses on the shifting sand so that we can direct them to Jesus Christ, so they can experience a peace that surpasses all understanding. So make sure that you are ready to give an account for the hope that you have in Jesus Christ. So guys, let me know what you think. Leave your comments below. And God willing, I'll see you on Monday.